Hello, welcome back to the Markets For You video. In today's video, we'll dive into the practical application of the moving average on your trading chart. We'll cover how to set up the moving average and explore three powerful methods: single moving average crossover, and the triple moving average methods. Okay, so now let's just get started. Let's set up the moving average on our chart. Whether you are using MetaTrader or any other platform, the steps are quite similar. To set the moving average, open the trading platform. In this particular video, I'm using MetaTrader 4 or MT4. Go to the insert menu, and then we can just select indicators, and then we can select trend, and then we can just use or select moving average. For this example, we'll use the 50 period simple moving average or SMA. Adjust the period to 50, choose the simple, and then apply it to close and select color for easy visibility. Okay, in this particular video, I'm using red because my bullish candle is green and my bearish candle is blue. So I'm using red to differ from my candlestick colors. And then we can just click OK to apply the indicators to our chart. Okay, now let's look at how to trade using a single moving average or only one moving average. Okay, a single moving average can help identify the overall trend. If the price is moving above the moving average, it indicates an uptrend. Conversely, if the price is moving below the moving average, it suggests a downtrend. Here's an example. When the price crosses above the moving average, in this case the 50 period moving average, it signals a potential buy opportunity. Okay, you can see here that this is a cross above the from below, it crossed above the 50 period moving average, so it signals a potential buy opportunity. Okay. Meanwhile, when it crosses below from above, okay, it signals a potential sell opportunity. It's essential to use another indicator to confirm this signal, such as a stochastic indicator or oscillators. But you have to remember one thing: even though the price is moving above the 50 period moving average, it does not always indicate an uptrend. Okay, the price may eventually slow down and break below the moving average. Okay, you can see that in this particular sample that the price is moving above, okay, the moving average, but then it moved back lower and break below the moving average. Okay, it's moving back higher again, moving back above, break the moving average, and then it break lower again and we create a downtrend movement. Okay, so we have to make sure that when the price is moving higher or above the 50 period moving average, the moving average itself must slope higher. Okay, if you can see here, it moving higher, it breaks from below to above, but the moving average is sloping lower. It means that there's a possibility that the price will follow the moving average. Okay. Similarly, if the price is moving below the moving average, confirm that the moving average is sloping lower to confirm the downtrend. Okay. Now let's move to the second trading strategy using moving average. The two moving average strategy or the moving average crossover. Let's set up and use the moving average crossover method, which involves two moving average, a short-term and a long-term moving average, or we can say a faster or a slower moving average. In this example, we will use the 50 period SMA and the 200 period SMA. Okay, so now let's just add the 200 period SMA. We can use the same steps, indicators, trend, and then moving average. And then we can create 200. But then we can choose another different color. In this particular center, I'm going to use orange. Okay, now you can see that we already have two moving average here. Okay, the first one is the 50 period moving average using the red color, and the second one is the 200 moving average, the simple moving average using the orange color. A moving average crossover occurs when the short-term moving average crosses above or crosses below the long-term moving average. A golden cross happens when the 50-period moving average crosses above the 200-period SMA, indicating a potential bullish trend. Let's just find an example about it. Okay, you can see in this example that previously the moving average is moving, the 50-period moving average is moving below the 200 moving average, and then it crosses higher from the below. Now is the 50 moving average is moving higher than the 200 moving average. So this crosses is called the golden cross. Okay, so it happens, it will show that there's a potential buying opportunity, and then it indicates a bullish opportunity. But you have to remember, the price must move above. Okay, if the price move back below, then there's possibility that the price is consolidating. Usually, if we are using the two moving average, it will move between the moving average to consolidate. Okay. Meanwhile, a death cross occurs when the 50-period moving average crosses below the 200-period moving average, suggesting a bearish trend. Okay. Here you can see an example of a death cross on the chart. Let me find. Okay. You can see that the price is actually above the 50-period moving average and above the 200-period moving average, and then the price crosses below and then consolidating between the moving averages, and you can see that the 50-period moving average crosses below the 200-period moving average. It's called as a death cross. Okay, now you can see that actually the price is now moving below the 50-period moving average and showing a downtrend. Now, finally, let's explore the triple moving average method. The strategy using three different period moving average to provide a clearer picture of the trend and reduce false signals. Well, we are going to use three moving average. We already have 50 period moving average. We already have the 200 period moving average. Are we going to have another slower moving average or another longer term moving average? No, I'm going to use medium term moving average. I'm going to use 100 period moving average. So we will have 50 period moving average, we will have 100 period moving average, and we will have 200 period moving average. Okay, we already have 50 period moving average in red, we have 200 period moving average in orange. Now let's just add the 100 period moving average using the same method, the same steps. Insert indicators, trend, and moving average, and then we can choose 100 here, and I'm going to choose another color different than blue, green as my candle, different than red and orange. So I'm going to use the color white. Okay, now white is the middle or the mid-term or the medium term moving average. Okay, okay, when the short-term moving average is moving above the medium-term moving average, a medium term is moving above the longer-term moving average, then we can say that the trend is actually in the strong uptrend. Meanwhile, if you can see from this example that the short-term moving average or 50 period moving average is below the medium-term moving average or 100 period moving average, and medium-term 100 period moving average moving below the 200 moving period moving average as the long term, it's showing a strong downtrend move from the price. Okay, so you can see that when the price is moving above the tree line, it shows an uptrend. Meanwhile, when the price is moving below these three lines, it shows a downtrend. Like this, it's moving downtrend. If the three lines are not aligned, it might indicate a consolidation rather than a trend change. You can see, yeah, if the price, the you can see that this moving average already above the medium term, but it's not particularly going to say that it will change the direction unless it's already moved like this. Then it will be confirmed to move higher. Okay, now how about if the price is moving above the short term? Okay, you can see that now the price is moving above the short term, but it rejected by the medium term and it will go lower. So we can say that the short term can be the resistance here. Okay, can be the resistance or the support. The price, when the price is moving above, when the price is moving below and then trying to move higher and trying to break above the 50 period moving average, then it will reject it and it will go lower. But if it's able to break above the 50 period moving average, it must also break the 100 period moving average clearer, and then it try to reach the long term. Then we can say that it might change the direction. But when the price is rejected by the medium term, then it will continue to, following the previous trend. Okay. Now, to summarize, using moving averages can significantly enhance your trading strategy. Start with single moving average to identify trend, and use the crossover methods to spot potential buy and sell signals, and apply the triple moving average methods to robust trend confirmation. Use the 3 moving average on your chart, ensuring you have clear color distinctions to better visibility. If the 50 period crosses the 200 period, it might indicate a trend change. If you find this video is helpful, give it a thumbs up, subscribe to our channel for more trading tips, and hit the notification bell so you never miss an update. Let us know in the comments which moving average strategy that you are using, and if you want to discuss another method or technical indicators, let us know also in the comments section, and we can provide a video for you in the future. That's it for this video. See you in the next video. Happy trading, everyone.